Morning, Tim. Happy Monday.
Good morning, Fred. Pardon me.
That's, that's right. That's going to be the title today. Pardon me. A lot of
Pardon me.
press is coming around with that.
Yeah, I would have done the same thing.
Yeah, I guess. And the question I have is, um, does that pardon him from all his transgressions throughout his life, or just is it a
He's
time
got a
limit?
10-year window. Over the last 10 years, he's pardoned for everything he did for the last 10 years.
So that's, yeah, I guess. Well, 10 years doesn't exonerate him for anything he did during the first 6 years of the Obama administration, right?
I guess so. It's got to go back to what, 14?
Yeah, interesting.
And all the turkeys he pardoned
That's,
alongside him. So
that's,
it's a whole other deal.
and look what happened to them.
Yeah, that's right. So um, I think that the politics are really going to overwhelm us for the next week or so. Politics have sort of superseded the economics and the financials in the
Hmm.
marketplace. Um, we have, I think, this whole window. Um, I think the arguments in Congress, that's all you're going to see on TV. Focus is going to be, oh, you know, they'll say something like Hogan, or does Hogan have to be? Does he have to be approved by
Homan.
Congress?
I
Homan.
Yeah, I think so.
I'd like to see that.
Yeah.
Uh, what's your position on exporting uh, illegals? Your mother.
That's right. He's not taking a backward stance at
No,
all.
talk about a no bullshit guy. I
Yeah,
mean,
come and get me. You said there was death threats against his family. Yeah,
oh
come and
yeah.
get me. Yeah.
And that's another thing. You got threats against the people that are going to go to Congress. How many people are out there with guns chasing these people?
Yeah.
It's
Yeah, we are definitely living in scary times. People are getting very angry. We got a very angry electorate.
The bookmakers are probably making bets on whether or not Trump will make it to inauguration. It's a little ghastly, but it's
Yeah,
the ghouls are out there for
I
sure.
remember the ghoul pool back in the early '90s.
Yeah.
Talk about ghouls.
So regarding my position on drillers,
Yeah.
um, I've been thinking that as a general rule, the drillers track the price of the product. In other words, uh, gas and oil, gas frackers, oil drillers, gas carriers, they're all sensitive to the price of the commodity underlying. The idea being, if what you pull out of the ground is worth less, then you're worth less. But I think that's the opportunity. I think we got really supply on one hand going up, lowering prices, and demand on the other hand going up, raising prices. So demand for the companies that pull that stuff out of the ground, that's gone up. And those earnings should start to show up in maybe 2 quarters. They're going to be very busy guys. Um,
So
natural
what are you
gas
saying?
carriers,
Long
frackers.
drillers short the underlying, short oil and natural gas?
Exactly. Exactly.
So how do you express, the drillers we know there's a handful of drillers that we could follow along with.
And carriers and natural gas tankers too.
But how do you go short? You can go short oil and futures, I guess, right? You can
Yeah.
go short liquid natural gas and futures, natural gas futures.
Yeah, there's a couple of ETFs that are only natural gas assets.
Okay.
I think UNG is one of them. This is not a recommendation to buy or sell stock.
Right,
Get a hold
right,
of
right.
it.
Just telling you what I'm thinking, right?
Yeah.
Exactly. Exactly, yeah.
Yeah, but I think that's a pairs trade that could work out very nicely, you know, because
Right.
it really flies in the face of the norm. You would expect those two markets to track each other. but they're going to diverge.
Yeah, that makes sense. Long the drillers and shippers, and short the underlying oil and natural gas.
Yeah.
I like
Yeah,
it.
so that's what, and I think that's a good position to ride for the next sort of 6 months or so. You know,
Yeah.
take some of the risk out of the position.
Um, thoughts on the, any new thoughts on the Treasury Secretary, dollar, bonds?
Well, how would you go about neutralizing the BRICS? Because that seems to be the way to go.
Yeah, I saw a tweet last night that Trump came out basically saying anybody that's going to try and remove the dollar as a reserve currency is going to have a big
Right, we're going
problem.
to give them 100% tariffs.
Yeah,
We're going to force them to take vasectomies. You know, he's going the whole
take
9 yards.
take out their generations behind them. Yeah,
That's right.
and Argentina, was the first one to support him.
Yeah,
So I think you got to be friendly to Argentina. There wasn't a comment on India, and I thought we'd see some good benefits out of a partnership with India. I know you've mentioned that in the past that they would be a good they would fill the place of the Chinese if we ever did get into a serious trade war with the
yeah, it
Chinese.
could be a great replacement, low cost producer. But India is one of the founders.
Hmm.
India is the eye in BRICS,
That's right.
right? So it would be a big step for them to back off here. Got to find a way to do that, you know.
Yeah.
So I think those are the two big events we saw over the weekend. Trump launching an attack on BRICS, and Biden saying he's going to pardon his son, and then presumably his brother and his grandchildren and his stepchild, and
Yeah.
you know.
If it's true that the whole family has been involved in money laundering for the last,
Well,
few weeks.
it's just the unseemliness of what could come out in discovery. If a lawyer starts asking these questions, what's the source of this deposit? What's the source of that? You put 60,000 in your granddaughter's account. Where did that come from? How did that originate? I don't think he wants to see any of that. So, and the party's going to be right behind him. The party doesn't want to see any of this either. So the Democrats on the Hill are going to be supporting him tooth and nail. Well, he's a father, what would you expect, And it's true. I mean, I would do the same thing if it were my kid. But it's really a remarkable state of affairs.
Yeah, denies it all along. I won't do that. Nobody's above the law. And now there's a lot of calls for Trump to pardon all the January 6th people that are still in prison.
Yeah, I guess that's the next shoe to drop, right?
Yeah,
You
yeah,
know,
yeah.
I mean, they put people in jail for a long time for that.
A long time.
Yeah.
Yeah, for just being in the wrong place.
Maybe some of them are guilty. Who the hell knows?
Right.
We only see what they want us to see.
That's so true.
And even then, we don't see a portion of that.
This is the Truman Show. That Jim Carrey movie from way back. It's
Wag the dog.
yeah,
This is Wag the dog.
all of it. Yeah.
We live in strange times.
Well, I think here we are in December, and I know we've always talked about the Christmas rally. You think we're going to see a stock Christmas rally?
I think probably we've seen it already, right? I mean, these markets just go up every day.
Yeah.
I'm seeing a couple of guys starting to get bearish on that. And, from the levels, I had a conversation at my Thursday meeting one time because these guys are all investors. They buy and hold. And the question is, well, should you have a target? There are stocks you just want to own forever. And, I made a point that you should have a target. But I don't think that target necessarily has to be a numerical target. In other words, you buy or invest in a stock at say 50, and the way you and I think as traders, we say, okay, 70 looks like a good opportunity. We'll start to scale out at 70, and maybe we got a risk at 10 points, so we got stop losses in at 40. That's the way a trader thinks. But investor thinks, listen, I want to own this stock, and I want to give it to my kids.
Right.
I think an investor's target ought to be multiples.
I was going to say that when I worked at Swiss Bank, I was the market maker, trader, and you thought in terms of buying it at 50, and if it gets up to 70, we'll scale out. And they started to talk about percentage. Mike, I remember the GUA.
Oh yeah, yeah, yeah.
The GUA would talk about, no, we want to make 5% of this trade. We want to make 3% of this trade. You got to talk about percentages, not
But
pips.
again, that's numerical. That's
Yeah,
just another way to express it. I'm really thinking I'm buying it, and if the multiple goes to 30 times earnings, that's it. I think I'm going to get out. I think if you want to look at it that way, put it in a class of other stocks and say this is the peer group. And the peer group is trading at a multiple of, say, 22. And as long as it's trading there or better, I'm going to stay in this thing. But if the multiple springs out at maybe some percentage over peer, then that's pricey with respect to peer. And maybe that's the way the targets ought to be looked at. And if you look at them this way, I mean, take NVIDIA. I don't know what the hell the multiples are now, but they improve radically every time the earnings get projected. They have a blowout quarter, and their earnings are up, and then all of a sudden they're trading at 20 times instead of 50 times. So that's got its problems too. But I think if you measure it against the peers, at least it makes more sense to have a target and a stop loss. So
you just gotta be very comfortable with those sectors. You know, I remember 30 years ago, the internet providers. AOL was the star forever, and people were going to own AOL forever and ever. And
yeah,
AOL was buying everything they could. And now, if you have an AOL email address, you're showing your age,
yeah,
right?
they laugh at you.
So, exactly. So
That's true.
there are, I guess Google and Microsoft are still the place to be in terms of tech, and now it's Nvidia. So what's going to happen in 5 years? Is Google and Microsoft going to be obsolete?
Yeah, but that's the thing. I mean, there you look at the peer group as it is at that point, and you look at the multiples as it's trading, and basically, if you're managing those kinds of long-term assets, it's investing based on multiple targets as opposed to numerical targets.
And I guess that's the way financial planners are supposed to think, right? You got to own this. You got to own this for. You got to own this sector. You got to own these best in class for a longer period of time. But your point about the multiples will refine it down and give you
Yeah,
an exit strategy.
it's a way to quantify because clearly the numbers themselves don't quantify anything anymore.
And for short-term traders, I've done a number of different seminars, trading seminars for younger people, and I always explain you need to know where to get out. You look at the old line that you could be long, short, or square, right? And square is waiting to get in.
Mm.
And when you get in, you got to have an exit strategy. An exit strategy on the profit side and on the loss side. You buy something at 10 and you say, if it goes to 50, I'm getting out. And it goes to 50 immediately. And you say, you know what, maybe I keep this. This looks good. And then it goes to 40. It's all right if it gets back to 50, and then it goes to 20. And you say, all right, if it gets back to 40, and then you wound up turning a winner into a loser. So you have
Yeah,
to be very disciplined on both sides of that.
I can't tell you how many times I bought a stock at 8 and it went to 11. Only it was a chapter, it wasn't a price.
That's right. That's right. 8 to 11. That's right.
So gold doesn't look too terrific at this point. And the inflation trade is losing its luster. And the Treasury Secretary, I think, is a big piece of that.
And with that, do you say commodities come down as well, or is it just gold?
Uh, wow, I don't want to get too esoteric here, but what Friedman taught us was that output and money supply drive that relationship determines inflation.
Hmm.
Getting velocity out of it for a minute. So if we're in a kind of macro drill baby drill scenario. We're in a production scenario. And this, I think maybe the term for this is the age of the supply siders. I think the Trump experiment is I'm going to stimulate production, goods and services. And I'm going to do that not with expanding the money supply. Let me take it back a step. What we have here and what we've had since the Obama days is inorganic growth. By that I mean we've expanded the money supply and we've expanded the government's expenditures. All of these gains that we see, all of these employment gains, are a function of the government employing people.
Right.
So, we've embarked on a path that said fiscal stimulus by spending and by hiring and growing the public sector. And now every time we look at the numbers, to the extent that we can believe the numbers, we see the employment numbers. And when you drill down, you see it's government employment. It's not private sector employment. And I call that inorganic growth. I mean, if we just took that to its absurdity, then we employ everybody and we're all in the army and employment's full employment. Terrific, And is that an efficient economy? No, it's a bloated, ugly, bureaucratic-driven economy where there's no competition whatsoever, and the government is just producing. We're the old Soviet Union. That's a reach, but I mean, just take it to an illogical conclusion. And that's been the path we've been embarking upon. And every quarter and every month we see the numbers, and we get closer, moving more and more in that direction. And I call that inorganic growth. Trump years was organic growth. We reduced the public sector. In fact, he really didn't. He grew the public sector too, to be fair. But he grew the private sector at a greater rate than the public sector. And now we want to shrink the public sector through DOGE, and we want to increase the private sector. Drill baby drill and produce and tax incentives and all of these things. So I think we're moving into the age of the supply sider. And the last time we saw that, Laffer was around and driving things to some extent. And we had long-term positive growth and disinflation. So I guess the way I'm looking at the world now, if he's got this kind of mandate and the Democrats let him govern, his approach is going to be organic growth, not inorganic growth. Shrink the government sector, or at least grow it at a lesser rate. Shrink the money supply. And there you got a Treasury Secretary to do that. I don't know who his Fed Secretary is going to be. His
Chairman.
His Fed Chair is going to be, but whoever it is, it's going to be, don't let this balance sheet grow at anything like the rate. And so I think those are positive things. And in reality, that's the only way out of this. There's no other way. So from a really broad, macro, 50,000-foot overview, I think that's what we're in for here. And that's a very, very positive long-term investment scenario.
Yeah, transfer production and employment and growth from the government to private enterprise.
Yeah.
Yeah.
Create the incentives to do that. Make the tax incentive do that.
Right.
Reduce the IRS.
There's always been the complaint that Trump is tax cuts for the billionaires, tax cuts for the millionaires. But some of the things that he's proposed in the campaign, no tax on overtime, no tax on tips, those are really incentives for the working man, for the blue collar guy.
Yeah. I mean, I'm old enough to remember when Reagan was running. And it was get the government off your back. You know better what to do with your own money than the government does. And, Trump grew up in that environment. He got rich in that environment, really.
Right.
So I think he's a believer. And it looks to me like the cabinet he's picking are believers, too. So I think we're in for a good long term. Don't forget the Reagan rally lasted for years. We had right at the end of the Carter years, I mean, sentiment was so negative, and then it was Morning in America and that whole deal.
Right, but looking at the equity markets and valuations and stock prices, we were coming from a very low base in the Reagan years, and that lasted for years. We're now at all-time highs in pretty much every index. So is this rally going to last for years here, or the fact that we're moving from this government-sponsored growth to private enterprise growth is it's going to take some time to filter in.
No doubt, no doubt, and that becomes a timing issue to some extent. But I would say to you that that's where the multiple compression comes in. You know, I mean, you're a company trading at a multiple of say 25 with stable earnings, and your forward multiple is 25 because we're basing your earnings on the old days. And all of a sudden, you got these incentives kicking in, and GDP's growing at 5%, and now your multiple, based on your new earnings, your earnings spike up, and your new multiple is 15. Yeah, and I think that's really where we're headed. It's going to be sector specific and company specific within those sectors, and you got to pick your spots. It's
Right.
like everything else, When during the dot-com boom, we were looking at each other saying Yahoo and all these stocks are taking off, and you knew that out of 100, only 8 were going to survive, and you had to pick the 8. I think we're back to those days to some extent.
Yeah, yeah, I don't disagree with that. Picking sectors, I think, is important. That's what the benefit of the ETFs are. It gives you a broad range of those different sectors that you can move into.
Well, that's a whole new environment too.
Yeah,
I mean, back in the 80s, you didn't see ETFs,
that's right.
You
And
couldn't
now
believe
there's
it.
hundreds, thousands of them, right? They're all over. And
Yeah.
ETF specific on anything you're looking for.
I was a Eurodollar broker when Reagan started to talk about IRAs. We didn't have that. And I remember coming in and looking at the flows, and you could see the money flow into the private sector. I mean, people started buying IRAs, and money was flowing out of bank deposits and into IRAs. They were bank deposits too, but they were different deposits. And we could start to see money flows that are directly responding to
These
policy.
incentives. Yeah.
Yeah. So this is a really fascinating time.
Yeah, I think the next several years are going to open a lot of eyes.
Yeah. I want to buy a DeLorean and go back to the 80s. All right. So
All right, so
see you
to
later on in the week and see how things look.
right, but overall, you're comfortable with the drillers and short the underlying.
Yeah, I think, but that's not going to work tomorrow,
Right,
you know. I think it's,
scale into those. Yeah.
yeah, but you can accumulate that position,
Hmm.
wait for rallies in crude, and you're liable to see that. Somebody fires a missile in the Middle East and oil goes up 2%. That could be an opportunity. Natural gas, I think, as we produce this stuff, we're going to try to figure out ways to get it to Europe. That's one of his levers against Russia. I'm going to produce natural gas, and I'm going to replace you as the producer. So think about this, and maybe you'll give me some concessions. What are the implications of peace in the Ukraine?
Did you see some of the comments that Putin made about Trump and the assassinations, and he's been targeted, and
Yeah, I
he's-
have.
yeah,
He sounds sympathetic.
yeah, and I don't know, how to gauge it. Is he being genuine? Is he trying to get on the good side?
Well, first of all, he's a politician, so none of them are genuine for openers.
That's right.
Anyway, those are the thoughts.
Yeah,
See you
all right.
later on in the
Lot
week.
to chew on. All right.
Okay.
Well, listen, hit him straight today. Have a great day. Bye.